Hello, everyone. This is Rick Hopkins, best-selling author of The 3 Steps to Financial Success and president of RH Consulting. Now, tonight we're going to talk about the W-4 tax withholding form, that little document that we're all familiar with, but nobody really seems to understand. Now, don't you think it's a little strange that every job requires you to fill out a W-4, yet no one ever taught you how to do it? Now, why won't human resources at work instruct you on how many allowances to claim? And what the heck is an allowance anyway? Now, there's nothing magical or mysterious about an allowance. It's simply a mathematical calculation that tells your employer how much tax to withhold from your paycheck. That's right, you tell the employer, not the other way around. Now, it's not the same as a dependent, a deduction, a credit, or a tax write-off. They're completely different things, but sometimes people use them interchangeably. Now, you should adjust your allowances for significant changes in your life. If you have a child, if you get married, if you get divorced, if you buy a house, if you sell a house, all these things impact significantly the tax that you have to pay Uncle Sam at the end of the year. Now, 80% of Americans overpay their taxes simply because they fill out their W-4 incorrectly, causing them to pay too much tax every year. Now, most people think taxes are way too high, so why would you overpay them unnecessarily? Now, correcting your W-4 only requires 3 things. Read the directions, read the questions, and answer them honestly. Now, HR will not give you tax advice, and neither will I. But what I will do is share information and effective cash flow management strategies. Now, please be aware that the following examples are hypothetical and for illustrative purposes only. Hey, I've got a legal department too. So I want you to meet Mary. We're going to go through her W-4 short form. Mary is a teacher who makes $50,000 a year. She's a single mother with 2 children and 1 job and claims the child care credit. She believes that an allowance is the same as a dependent. Why? Because she doesn't know any better. That's what she was told when she was 16, and for her whole life she's put down 0 or 1 because someone told her that's the way to do it. So she claims 3 allowances on her W-4, 1 for herself and 1 for each of her 2 kids. So we're going to quickly go through her short form, and I'll show you what I mean about reading the questions, ignoring all the other stuff, and answering them honestly. First one is pretty straightforward. Enter 1 for yourself if no one can claim you as a dependent. Mary's always done that, so we'll put a 1 there. Now, the next one has 3 parts. And in Mary's case, she doesn't need to read all 3 questions because the first question nails it for her. You're single, have only 1 job. Okay, that's it. That's Mary. So we put a 1 there. Now, some people may continue, that may not apply to them, or they may just want to continue to read on. I caution you against reading on sometimes because it can confuse you. Okay, number 2 is you are married. Okay, well, she's not married, so ignore that. Your spouse doesn't work, she doesn't have a spouse. Ignore that. Your wages from a second job. Well, we said, she's only got 1 job, so ignore that. Spouse's wages, blah, blah, blah. So you see my point. Some people would read all 3 of those and they kind of get confused. Don't do that. Keep it simple. Okay, C, enter 1 for your spouse. There we go again. She doesn't have a spouse. So just don't put anything there. D, enter number of dependents other than your spouse or yourself you will claim on your tax return. Okay, she does this anyway. She claims her 2 kids. So we've only answered 4 questions, and already she has 1 more allowance than she's always claimed. So reading the questions, sometimes can be a benefit. Okay, E, enter 1 if you'll file as head of household. Now, there are instructions that go with this form, and if you read the instructions, Mary clearly qualifies as head of household. Number one, you have to be single. You cannot be married to be head of household according to the IRS. And you must have a dependent that you pay more than 50% of the support for. She clearly fits that description, so we give her the 1. Okay, now F and G can be a great source of allowances for single adults or people with children that are paying a lot for day camp and child care and those kind of dependent services. So if you spend at least $2,000, and I'm telling you, you can spend $2,000 very quickly on child dependent care expenses, enter 1 if you can claim $2,000 worth of expenses. Now, claiming is one thing, documenting is something else. So be sure that you keep a record of the money that you spend for child care, because that's what you'll need in the end to claim. And you can only claim 35% of the total, by the way. So if you spend exactly $2,000, you could claim 35% of that, which is $700. But most people claim $10,000 or more. I'm telling you, I'm one of them. All right, we'll put a 1 there. Now, just a note, don't include child support payments. People always want to bring child support payments into this stuff, and it just muddies the water. Okay, G, child tax credit. We're going to go into the bullets, which will make this more clear. Again, the first one nails Mary. If your total income will be less than $70,000, well, we said she makes $50,000 a year, so she's basically done. Okay, so then we want to enter 2 for each eligible child. So at this point, she's got 2 children, so 2 times 2 is 4. But here's a time when it's okay to read a little further, because it says then less 1 if you have 2 to 4 eligible children. Well, she has 2 eligible children, so instead of 4, her number would actually be 3. Okay? So the next one can be confusing if for Mary, so she ignores it. And H is pretty simple. Like Bill Clinton once said, it's just arithmetic, okay? Just add your numbers. And those numbers together come up to 9. And that's the number of allowances, which is a lot different from 3. So you can see that's going to put a lot more money in her paycheck. And she can use that money now to pay credit cards, to pay everyday expenses, maybe to invest a little bit. I mean, it's better than letting Uncle Sam keep her money all year, then pay it back to her with no interest. So the bottom part is just for folks who really, really, really want to get serious. There's a long form for the W-4. It takes into account last year's taxes, your itemized deductions, your interest on your house, all that stuff that can generate more allowances for you. You just have to provide that documentation. So that's basically it. It wasn't that painful. It's worth spending the time to take a look at this form and to do it correctly. So this is what most of us are looking at, the actual withholding allowance certificate. And you can see that's where she places her 9 allowances. She fills it out, her name, social security number, address, all that good stuff, single, married, all that good stuff. Signs it, dates it, sends it to HR, and her next paycheck will have a lot more money in it. So in conclusion, how do you know when you aren't claiming the correct number of allowances? It's very simple. If you're getting a tax refund, you're not claiming enough allowances. I can't be any more plain than that. Some people think getting a tax refund is good. I'm not one of those people. I don't believe in letting Uncle Sam hold on to my money all year, use it to pay bills, invest, all those kind of things that I should be doing with that money, then give it to me at the end of the year with no interest. So I want my money to do my own business. So there's lots of great strategies to deal with this situation, and we'll look at some of them next time. So this is Rick Hopkins, and I wish you the best in financial success.